So are you able to time the market? Because since 1972 there have been 11 bear markets in global equities in Europe. The question I always get is, Maurice, the market is doing really well, so why not take my returns and step out of the market? And that's a good question. So today we are answering the question, could you time the market when things go wrong in the economy? So what's the best time to step in and step out of the market? And do you have to take your wins when you are having good returns on your investments? So here you see a graph of the MSCI World Index over a period of 44 years from 1980s to 2023. So to give you an answer, we have to dive into annual returns and the intra-year declines. An annual return refers to the return that an investment makes over a complete calendar year. This return can be positive or negative. An intra-year decline refers to the largest drop in the market from its highest point to its lowest point within the calendar year. So sometimes you might lose money during the year, but still end up with a positive stock market return. For instance, in the 1980s, you see there were times when the market went down with 11%. But by the end of the year, you still end up with a positive return of 13%. So the red dots shows the largest drop during the year, and the gray bar indicates the actual return at the end of the year. You will see that the stock market often goes up and down, but most of the time you see the gray bar ending up with a positive return on the end of the year. History shows that equities have typically recovered and have tended to post strong results over the long term. So the most important question you can ask yourself is, how often does the market close in the positive and how often in the negative? And this chart is also answering your question, because over a period from 1980s till 2023, that's in total 44 years, there were 33 years of a positive return. This means that 75% of the time the market will go up. So if you know that your portfolio consistently goes up with 75% of the time, the question if you have to step out of the market is not as difficult to answer anymore, right? So keep up the good work, stay invested, and see you in the next video.